Hello, it is July 7, 2023, and let's make a market recap for this week as well as upcoming earnings season for us to prepare for. Okay, let's begin. Wait up. Presenting slides. Okay, so profit taking and pullbacks first, selective moves as earnings season looms. So we've got quite a lot of Q2 earnings to prepare for. We're seeing that for the next week, ending July 14, I think the biggest, of course, that is very important would be the reporting of the financials, in particular, JP Morgan, Wells Fargo, Citigroup, but also we have to take note about BlackRock, State Street, and United Health. But really, I would go focus first on the big banks, JP Morgan, Wells Fargo, Citigroup, and that would, of course, also affect your Bank of America. After that, you'll see, of course, your big fangs, most especially your Tesla. Tesla's going to be reporting as well as Netflix on July 19. Goldman Sachs, more banks will be reporting, such as Morgan Stanley, Interactive Brokers, Charles Schwab. So you've got a lot of industrials that's also going to be reporting next week, which is next week, which are Lockheed Martin. You've got companies like Raytheon is going to be reporting on July 25. So you've got actually a lot of the banks first, the brokerage firms next. Then you've got the big fangs. Then you also have a lot of these semiconductor names like TSM reporting. You've got actually a whole slew of companies, including oil companies like Schlumberger. You've got companies like ExxonMobil, Chevron reporting at the end of the month. So it's really going to be a whole mix of a lot of earnings season coming out soon. And so, with all these deluge of earnings, let's take a look on a few things. Since next week, we'll be looking at the biggest bank in the world, which is JP Morgan. We are going to be bullish ahead of earnings here. We're looking to buy around $140 to 145. With any downside towards 135, still a buying area for us. We think that the downside is really limited towards 125. Like the fundamentals of the company, and we think that's actually going to be a cost averaging technique for JP Morgan with uptrends looming for the next year and a half. So, well, actually, doesn't matter if it consolidates over the next couple of months. I think that's actually on an uptrend with higher bias, with a bias higher. So a few things to consider if you're looking to be a bull on JP Morgan would be to consider call options. Currently, you've got a recent high of about $170 for JP Morgan. It trades at about 1.6 times price to book, best in class in terms of credit risk management. I think that at 170, for those who are looking to buy into it, it's possible that the pullbacks this week or next week can actually trigger a lower area to enter for your for a JP Morgan call option, an out of the money call option. Perhaps you will be able to buy this at $1 for January 19, 2024, 170 calls. Let's take a look if we can get in. Last night it was about $1.37, down 10%. So every drop of JP Morgan can actually allow us to get a theta decay for these out of the money calls. So we'll see about that. Now, for those who are more near term in thinking, given that the numbers are going to be coming out in July, we think that whether it happens to go down or we don't think that it's going to miss expectations, honestly speaking, but it may actually have a slow move given July, August, September is not necessarily quite a strong liquid time for the US. Seasonally, July is good, but August and September has been pretty doldrums. So we'll see whether these can actually rally. In case that you are looking to go long for some call options, perhaps you can take a look at the 150 calls. 150 calls, however, are trading at about $2. So you might be able to get this at about $1 or $1.50. We'll see if we can get some entry points here. Okay. Also, for those who are looking a little bit farther, like JP Morgan September, there are two things that you can actually consider about the next 2 to 3 months. So for JP Morgan, I would assume also medium-term longs would be okay. Medium-term longs would make sense either 150 or 155 calls here. So around $1. If you can check this out, we'll see if you can enter the 155 calls at less than $1. So we'll wait if we can enter these. And then JP Morgan, you can also do some sell puts. I would say that the higher the better area would be about 125 or 130. So either you wait for the earnings to come out, see whether you can get a good premium, or after earnings, or really depends. Some people do it before earnings or after earnings. I would prefer that if before earnings you just simply make a buy call so that it's actually a limited downside. If you're wrong, then the call options will just expire to zero. Now, actually, it won't expire to zero, especially if you have time involved. Like this one is a September call option, so maybe it will fall, but not like zero. In any case, if you do sell puts, it might be better off after you read the numbers thoroughly. But I think that after the numbers are released, you can actually do some sell puts, which is essentially buying the shares of JP Morgan outright, either the 135 puts to be sold or 140 puts to be sold. So we'll see. But I think it's better off to do that after the numbers gets released. Now, this is also Delta Airlines. Delta Airlines will be reporting next week. We can see that that is a very strong rebound. So there's a lot of travelers. This is also potentially going to have a pullback first within the few days. And then depends on the earnings on whether we get actually higher highs and higher lows. But it looks like the recovery for airlines is very much strong. It just needs some pullbacks here. So we'll wait it out. But this one has a very bullish bias as well, with a lot of travelers, Booking.com, Marriott Hotel. So everyone in the travel industry is actually in the same outlook that it will still remain strong, at least for the end of the second half. So we'll see. You've got PepsiCo reporting numbers this week as well. You can see consumer staples have been elevated after reporting pretty good numbers. We'll see if the market can still sustain paying high multiples on Pepsi or even Coca-Cola. So far, it's just steadily trading here. So we're more neutral on these types of names. We don't think it's going to have a big move, but it's not also going to have any much surprises to share to the market. So really, it's more like a neutral to up, neutral to up. You've got companies like Spotify. Problem though with Spotify reporting numbers, these growth stocks, however, have already reached quite a significant resistance. It's already trading near the 2022 recent highs. And so I would say that unlike the rest of the names, these growth stocks might actually trigger any potential earnings, could actually trigger a downside or an upside. So we'll be more or less just watching how these stocks play out. You've got companies like Nike. Nike will not be reporting in July, but I wanted to watch this because Nike is currently trading at support, currently trading near 2023 lows of about January. It was trading before at about $100, then had a massive rally here towards 117. And I think that about $100 here for Nike is retesting a support. Anyway, a downside would just be limited towards 100 or 90. So we're looking actually to buy some dips on some world-class brands that are taking a sell-off recently on apparently consumer discretionary spending. But I would say long-term, this should be okay. So we're waiting for some entry pullbacks here on Nike. Some news that I think could be important for everyone to know about. The U.S. jobs report will likely show a solid gain. That's going to be released tonight, 8:30 p.m. Philippine time, which is 8:30 a.m. U.S. time. It's going to be a complicated drive for the Fed to cool inflation. That means that if you've got very strong jobs report, the U.S. Fed would likely continue to hike rates, or at the very least, it means that the Fed has not done enough to slow down the economy and curb the high inflation. So we'll see, but definitely a strong jobs report will trigger a nice pullback in the market, which we think is necessary as well for some healthy resets. Analysts today are also pointing to a few trends. They're saying that the economy could be experiencing either a rolling recession, wherein some industries will shrink while the overall economy remains above water. Some also believe that the US is experiencing a recession wherein there are a lot of job cuts, but these job layoffs are actually in particular towards technology and finance, which is very, very high salaries. So that means that these people would have a financial cushion to withstand the layoff. Therefore, that job cut will not be sinking the overall economy. Still, there are a lot of threats that could happen. Obviously, a strong jobs market could make the Fed keep interest rates very high for a long time. Some argue until 2026. So we'll see whether a full blown recession will still occur. So far, it hasn't happened yet. But the Fed may actually keep pushing this until it fixes the inflation issue. Today, actually, we have news that New Zealand's economy just dipped into a recession. Higher interest rates are biting. UK gilts actually is already trading above the March yields. So you've got really strong bond yields signaling a potential weakness or something breaking down in the economy. You've got Asian shares falling with last night's ADP report, dashing hopes for an end to a rate hike. Yellen has been criticizing Chinese um, treatment of U.S. companies during her visit to revive relations. So it seems like that didn't help the U.S.-China tension further anyway. Then you've got retailers. There are some people wondering on whether late September or early October, whether their sales could be affected as student loan repayments could lead some buyers to pull back. Around $400 billion, I think, is expected to be paid towards student loans, and that could actually be critical in lessening the spending on that front around October or September. So that outlook could be priced in for the holiday season as well. Now we had an impressive run up in the first half from first half 2023. It's actually one of the best first half ever since 1950. And you can see that very strong gain in the Nasdaq is 40%, nearing 40%. We haven't seen that in the past for over decades already. So that is quite a strong run up for Nasdaq. Nonetheless, with that type of move, what's going to be happening on the second half? So apparently, when you have a very strong first half, at least for the S&P 500, usually your second half is a little bit muted. You can't actually repeat a 40% move with another 40% move. However, chances are you can see that you've got a mix. Sometimes you've got a continuation, but about a 10% rally, sometimes even higher here, which is 20%. This was 1950s. And then you've got in the 1995s, during the internet boom, there was a very, very strong rally further in the second half. So some people might actually think that this is reminiscent of the 1995 internet boom. However, others are also saying that this could be just like 1987, wherein you have a very, very strong first half and then a very, very negative second half. So take note that in the 1987, there was actually a strong move here of about nearing 25%, and then a huge drop in the second half, fizzling all those gains. So we have yet to be determined, the second half is yet to be determined. I would say that the earnings season will definitely play a role in that front. But July usually seasonally is also up about 1%. So it's not as if like you should expect a very, very strong month for July. Now, there are, of course, other people who believe that if this is a bull market in an equal weight S&P 500, this has to be one of the weakest bull markets in the last few years, because from the bear market bottom, the equal weight S&P 500 is just up 14% since October lows, lagging all the rest of the bottoms. So while the Nasdaq had the very best first half, it was actually concentrated, of course, with a few seven names. And for the bulls out there, though, this is what they're claiming, that should there be a very, very strong negative movement in the market, this $75 trillion pile of boomer wealth, which has not been spent, could actually delay any type of recession or any housing related crisis or any weakness in consumer spending. That's why the economy continues to be very resilient. So you also have to watch out household accumulated savings. Some are saying that this could likely be gone by October 2023. It really depends on what category of person you're actually looking at. There are, of course, going to be those baby boomers that would definitely have more money than ever, even until October 2023. But we're seeing that the excess savings are still falling down. So this is a likely reason why we could actually have a reversion to the mean. We might have some slowdown in some retail spending. We'll see what happens in the next few months upon outlook on retail sector. Now, since today we're going to be looking at jobs report, it should be noted that some data is also sharing that your hiring is actually lower. You've got actually job openings also going down from about um, more than 11 million here. You're actually seeing less than 10 million. So that means that there are less job openings, but there's still a lot of jobs. The fact that there's like 10 million job openings, around 10 million jobs, means that there's still a lot of jobs available. These are your um, hiring, and these are your quits. So your hiring still is okay, but there's just a really lower number of job openings, I think, that is being discussed here. Now, there are, of course, a lot of bulls who believe that as long as liquidity coming from bank term funding program continues to increase, it has served very well for the market equities to remain levitated and elevated. So this came from Joe Consorti. You can see that source. You can see that as the bank term funding program continued to go higher over the last 3 months, from end of March till about April, May, June, you have also seen the S&P 500 continue higher for June 30, 2023. So for the rest of the bulls that believe that the S&P 500 can continue trading higher for the next coming months, they have to assume that the BTFP is something for them to look at. Okay, so these are also a few things to watch out for. The leading lagging ratio indicates recession. So these are the gray ones. These are the recessionary times. And the black line here is your S&P 500. You'll notice that during these gray lines, your recession, as long as your leading indicators are actually falling, which is this number one, you do also have a consequent breakdown in your S&P. And then this second low, also a fall. The third drop here, which is a recession, you also have a low, but this one is very little. So sometimes it's a very shallow drop. And then four here, there was a drop, but before it dropped, it went higher first. So it doesn't have to drop immediately. It can even go higher before falling. You can see that happened here during the 1978 to 1983 era. Then here in the 1988 to 1993, you can see a drop here in the green line, but the black line here hardly dropped. There was a drop, but it's not that huge. Here in the number six, you can see that leading indicators are falling, but the stock market fell, but it took a while. So there was like a lag here. So there was a lag here. This was during the 2000 bubble. So there are often lags. Here you can see that in the 2008 crisis, there was a huge drop, and then that immediately also fell here. So now that we are seeing, of course, the COVID happened last 2020, and then recently here you have a drop in your LEI. You still haven't seen a drop in your S&P. Either the recession could come next year, so we are still very early to predict that. It could be a delayed recession or no, really a very long time coming. It's very hard to predict, but you can see that the S&P 500, all in all, from 1958 till about 2023, continue to stay strong. So a lot of people believes that the dips, if it ever occurs sometime within the next 3 months, would be obviously bought. So there's a lot of people looking to buy dips, and which companies they're buying. They're going to be looking at the earnings season this month, this quarter, to see the outlook for the next year. Now, there are, of course, other matters to believe upon, which is the inverted yield spread. This is another chart coming from Real Investment Advice by Lance Roberts. Been sharing that when you've got the inverted yield curve, which is seen in the bonds prices, it does indicate that a recession is looming ahead. Although it's very hard to time when that recession comes. Is it 6 months from now? Is it 12 months from now? It's also something to be wary of. Bankruptcy filings have been surging in the first half of 2023. You've got actually these periods in the past where A recession is often happening during a bankruptcy filing. So, with bankruptcy filing rising, even if there's no indication of recession yet in the US, people believe that it's just a matter of time that it comes. So, credit card delinquency, something to also watch out for, but I should note that this is actually all below 3.5%. So although it's rising, we actually view that a lot of the banks, especially like JP Morgan, has already priced in a lot of losses. So even if credit card delinquency rates would rise, we think that it already has been taken account for by some of the banks. Not necessarily all banks, but you have to choose which bank. That's why we're bullish on JP Morgan, that it's actually able to handle any delinquency rate. In fact, it's probably just less than 2%, 2.5% rather than in the 3.5%, which is what you are seeing from the industry average. Now, there are, of course, going to be a lot of companies that are profitable no matter what. In the tech space, a lot of people, this chart is good, so I'm going to just like read some of them to you. You can see that in the technology space, a lot of people continue to love Apple, and it's been priced today at about 30 plus times PE multiple. It makes about $100 billion of cash flows every year annually, and it trades also at $3 trillion. You've got companies like Sun Mobile, however, with cash flows of about 50 billion every year, 40 to 50 billion, depending on how cyclical the commodity oil prices are. But definitely, it's also trading cheap. ExxonMobil traded about 400 billion thereabouts. JP Morgan is also something to look at in the big cap space, which is reporting this week, making about 38 to 40 billion. That's why we're very much looking to go long JP Morgan every year with about 4 trillion assets under management in their wealth. They've got about 7 trillion assets in their clientele. Clients are about 80 million. They operate in all scale, which is from consumer banking to wealth management, investment banking, payments. So it's you can see that there are some really good names that are currently trading quite low in terms of book value. You've got very strong numbers coming out from Home Depot, still cash flows of about 17 billion. Nucor, which is steel. You've got apparel names like Nike, P&G, McDonald's. You've got companies like Coke, Tesla, and so on. So lots of good things to watch out for in this earnings season. Let's see what the companies would bring. Now, let's also share a few things. These came from Crunchbase. There are, of course, a lot of reasons why the market in Nasdaq is up 40% in the first half. In just the first half, it's up 40%. A lot of that is attributed with AI. You've got companies, of course, that are in the private sphere. Just go through it. So, of course, the most well-known is OpenAI. OpenAI was the one that was funded by Microsoft, $10 billion, and it's the one that is running and conducting all of those Chat GPT. You've got Cohere here, offering users access to natural language programming, large language model technologies. Then you've got Stability AI, Adept AI. Meta, of course, is doing a lot of their social media tech also allows businesses to use AI for ads. You've got Hugging Face, allowing users to build, train, and deploy art models using the reference open source in machine learning. Anthropic, that's also a very strongly funded AI company in the private space this year. Anthropic AI safety and research company building reliable, interpretable, steerable AI systems. I believe Google is the one that invested in Anthropic. They've got Inflection AI. Microsoft invested here. NVIDIA also invested in Inflection AI. It's a $1.3 billion investment. And then the second funding round was $4 billion. It's a machine learning startup engaging in redefining human computer interaction. Of course, Microsoft benefited, hitting near all time highs this year for a lot of AI products that they're integrating in their entire Microsoft Azure and Enterprise Office. You've got AI 21 Labs, specializing in developing AI systems with unprecedented capacity to understand and generate natural language. DeepL is a deep learning company specializing in language translation. Aleph Alpha, Runway, you've got Alphabet, of course, just Google, holding company, providing projects with resources, freedom, focus to make their ideas happen. Midjourney is a nonprofit research lab investigating new thought mediums to improve the human species. Most of these are actually in the private markets. So the market in the US basically concentrated their bets on the big tech, who is likely to have been playing a role in a venture model format to own all of these smaller startups or smaller firms. AI infrastructure tooling, you've got companies like CoreWeave, Light Matter, Anyscale, Weights and Biases, LangChain. So you can actually take a look at that. Of course, the world traded Nvidia not near, but $1 trillion due to the intersection of GPUs and really the infrastructure in AI has to basically be large language models, and they have to reinvent that entire infrastructure for the next decade. So people are paying up for those chips, those A100 chips that I think cost $50,000. And you need about $250 million just to essentially run a very simple large language model. You've got a lot of names here. Some are new. Well, most of them are new. Some just have a year or 2 years. It's not a very long time yet. So yeah, there's quite a lot of flurry in the AI infrastructure and tools. Replit, this was helping coders, collaborative coding. This was actually shown during the Google conference on the AI just last May 2023. So then, there's quite a lot of companies to watch and check out for. Canva, it's not listed yet, but Canva was also being shared to be working with Google. So you're seeing actually a lot of these AI applications like Jasper, writing tool, helping businesses create content. Yeah, and so there's a lot of these Gen AI applications. Adobe, of course, is listed. They shared their Adobe Firefly. The Met the beta test was already shared, but I think um, uh, a wider audience would take place on the second half, providing more tools on their generative AI applications. Yeah, so quite a lot of companies, as you can see. But despite the fact that there's quite a lot of companies, you can still see that global venture dollar volume for this year is still down. So you're actually seeing that for 2023, angel seed, early stage, late stage, and tech growth is still actually down half versus 2022. So although there is a flurry of buyers in the AI theme, it's still actually lower than in the past few years in terms of all the venture funding. Now let's take a look at a few charts here as well. That's very important in my view. Wait up. Okay, so we're seeing actually over the last few days, the dollar yen has actually depreciated from 125 to about 145. At about 145, we saw for the last few days some profit taking towards 143. That could be a function of carry trade unwind. That means that the people who borrowed Japanese yen are taking some profits on their Japanese yen gains after Nikkei hit 33,000 areas. You're also seeing the same thing happen from the currency to the Nikkei stock indices. A lot of profit taking as well happening for 2023 or the first half. So a lot of gains are being booked over the last few days. We're seeing very, very strong companies in the AI related semiconductor space in Japan, like Advantas Corp. You can see that in 2023, this is up 155%. We're seeing that this one is also getting some profit taking. So it's not really a distribution, it's just profit taking. A lot of people would still be buying these stocks on a dip. specifically if it falls something like 10 or 15, 20% within the next coming months. So I think that the reversal is not going to happen. It's just a matter of buying dips. You actually have a lot of potential buyers on the dollar yen at about 140. You can see that support at 140 there. A lot of buyers at about 30,000 or even 31,000 for Japanese Nikkei. So it's not really a strong drop. It's more like for now, profit taking. Tokyo elections, same thing happening. You're seeing that these stocks have gone from 13,000 to 21,000. So almost 60% for the year. You're seeing that there is some mild pullback, but definitely still a lot of buyers on any 5 to 10% dip. So just showing to you that the Nikkei is of course still in a bullish phase, and there's still a lot of money flowing into Nikkei markets. In generative AI, there's a lot of money as we saw, and there is a lot of buyers on Adobe. Somewhere here at about 400, 420, if there is a significant pullback. Somehow though, Adobe's trading currently at about 480. It's just consolidating above 20-day moving average. Companies in the spatial computing, you've got Unity working with Apple. You're seeing actually that Unity has broken above a lot of resistances. Trades today at $40, but more importantly, it's trading above 20-day moving average. So about 40 and 35, we're seeing quite a lot of attention and buyers still on companies like Unity Software for the Vision Pro. Okay. Companies like Copen, also in the spatial computing scene, because of their micro displays for those AR VR headsets. You're actually seeing some breakouts that are still potential retests here about $1.80 if there are some significant drops within the next coming days. 180 towards 170, there seems to be some support there at the 50-day moving average. SoftBank Group obviously is benefiting from this AI boom. They are heavily offensive with their venture towards AI. They also have plans to list ARM IPO for their semiconductor within the year or next year. You're seeing actually upon that news, SoftBank went from 5,000 yen towards 7,000 yen. We're seeing some profit taking so far in SoftBank Group. Could go towards 6.5 areas, but currently still heavily bought actually. There's quite a lot of support at 6.4 area as well. Now, this is your NASDAQ. You're seeing still very, very strong. NASDAQ has gone up above 14,500, trading at about 15,000. We think that pullbacks could happen, but limited profit taking. It's all going to depend on how well those earnings releases are within July. So you've got Tesla reporting, Netflix, Meta, and so on. So you've got a lot of these FANGs reporting after the financials, and that can actually continue to sustain this movement in your index run up. So any dips near 14.5 to 14,000, we would assume that the pullbacks will be bought hand over fist over the next coming weeks, if ever there will be a pullback in the short term. Apple is basically, you can see all the big seven. You can see that the big seven are all very, very strong. Apple trades at all-time highs now. It's actually trading above $180. Very expensive, but it's also being supported by many moving averages here on a technical basis. We've got a lot of support at 180 or even 175. We'll see whether there will be some corrections happening, but Apple is still leading the pack with an all-time high. We've got Microsoft, not yet at all-time highs, but very much cruising above the 20-day moving average, trading above 330, still trading at 340. Should this continue higher, that means that your QQQ would have very limited pullback. Your NASDAQ would have a very difficult time to go near 14,000, not even 14.5. So it all depends on how Microsoft and Apple actually trade within the next few weeks. And definitely that would be played upon due to their earnings. You've got Alphabet. Alphabet has had a slightly slower move. You've got some buying pressure at that $118. A lot of buyers at that 50-day moving av. Still on the uptrend. We still believe that the generative AI has a lot of buying pressure. So this will still be bought on any dips before the earnings comes out. You've got Nvidia, very strong. It has not deteriorated at all. Some bulls would try to buy any following any dips near 380 or 370s if there will be drops. So far, though, no significant drops and still on an uptrend for Nvidia. You got Tesla. Tesla had a gap up after reporting an 83% increase on their quarterly sales. You've got strength on a lot of Chinese electric vehicle demand. So far Tesla is cruising. There are a lot of resistances at about 320, I believe, due to the $1 trillion club mark. We'll see whether it will have a difficulty at the 320, but so far supported at about 250 for Tesla on a higher low. You've got Meta, very strong still. They've released their Threads, which is a competitor to Twitter. You've got actually still strength at about 250 area as well for Meta. In case there is some pullbacks, we'll see what the results will be this month. Amazon still actually trading above 20 days. We're seeing actually that all these big tech are all trading above 20-day. There's no significant drops except for just tiny blips now and then. So Amazon still traded about above 120, and we think that there's actually quite a lot of bulls waiting to buy on any dips for the big fangs. Okay, so a few things. We talked about the electric vehicles. Chinese demand has shared in June 30, end of the month, that those numbers all beat. So actually, all the Chinese electric vehicles have started to also show some buy signals. You've got NIO trading above 9 here. We've got Geely, which is 175 HK, also trading above 9. They're setting up for double bottoms and looks to actually sustain those run ups. We've got BYD in an uptrend, a lot of support at about $240 Hong Kong, should it drop. We've got a lot of buyers on Xpeng now breaking above 13. So any dips near 13 or 12 would be seen as a retest for buying pressure furthermore after a huge drop of a 90% drop from its peak of 75 towards current levels of about 12. Li Auto is actually now hitting near their not yet all-time high, but nearing those all-time highs. It's trading at about 35. It wants to actually break above 40. We'll see whether Li Auto can do that, but so far, very, very strong. A lot of buying on dips on Li Auto at $30. So far this year, S&P 500, just like the NASDAQ, very strong. A lot of people are assuming that maybe there could be a pullback near 430s or 420s, which will be a great buying entry for the FANGs and so on. We'll see whether that happens, but so far S&P 500 is still near these high levels of about 430 area, 433. So still above the 430 zone. You can see very, very strong momentum powered by all your Magnificent Seven as well. Let's take a look at some names. So you can see that the IPO format is still very weak. Though there was a rally from the 2023 lows, they're actually now retesting significant resistances for a lot of IPOs in the market. So we will have to watch out what happens to these IPOs. Will they actually break down when the markets reverse? The digital transformation ETFs, which are mostly crypto-linked names, are still down a lot. They have been recovering a bit, actually very strong recovery from the lows, but so far retesting resistances as well. So how it moves, these weaker names, we argue, will have to be a risk sentiment indicator on how strong this bullish market phase is. You've got companies like DoorDash. There's news that they would have to implement a new minimum wage law that can actually trigger a business model difficulty. So they're actually complaining to the New York for those laws. I do think that it's going to be quite difficult given that DoorDash is also trading near resistances of $80. So that affects DoorDash, gig-related businesses like Uber. So we'll see whether a minimum wage law is something that they can fight upon because they're supposed to pay per hour instead of per trip or per delivery in the app. We've got companies like Coinbase, obviously the ETF of a lot of these companies refiling Bitcoin ETFs have inspired people to buy more of these crypto linked names. This has rallied from about low 30s towards $80, but we saw resistances in the past at 80 and 100. So this may actually be near resistance, just like the digital transformation ETF that we showed earlier. IPOs like Coursera, we were just showing to you that the IPOs in general are still very weak. And so, although there was a rally, it's really a feeble bounce in the context of a longer term time frame move, wherein the IPOs are still very, very weak. Companies like Duolingo is actually getting hit with lower highs. So, this might actually be something to watch out for, as generative AI could have potential winners and potential losers. Just watch out on some of these spaces on whether these IPO names that are integrating AI is actually a winner or actually a loser. We've got companies like Mercado Libre, something to watch out for. Um, Latin America seems to be getting a share of sell offs recently. Mercado Libre has been trading below 1.2. This is one of the biggest drops over the last few, I don't know how long, but that was a very nasty drop last night, down 7.5%. So just watch out for the Latin American plays. We're seeing actually some sell-offs, not just on Mercado Libre, but also on StoneCo and NewCorp. So those are actually all being sharing some resistance areas to watch out for. Uber resistance at about 48, 45. So some sell-offs possible happening due to the news about the minimum wage laws. Overstock, this has to do with the BB Bed Bath and Beyond. So after a very strong run up, there's some profit taking. I don't know if it's going to consolidate at about 24, but it looks like there's there's going to be a lot of pullbacks first on some of these good news stocks. Overstock acquired Bed Bath and Beyond so that they could just sell all those things online. We've got Arc Genomics. These are unprofitable names, just watching how these stocks play out. So laggards that are still unprofitable, the IPOs, the genomic revolution, the crypto linked names, we're still seeing them in the doldrums. But some of them are consolidating with higher lows. We'll see how these things go by over the next few weeks and how their earnings are, as well as Arc Innovation. So Arc Innovation ETF has gone up from about low 29s, 30s towards 44. We'll see whether this can be sustained. You have some buyers on 10-20% dips. We'll see whether that will whether the bids will really come for innovative names, even if some of them are mostly unprofitable yet. We've got solar names selling off though. Ari Technologies, we're seeing some sell off here. So these stocks are, so I'm sharing you selective movements. Some stocks are being sold off actually. EHang is actually trading at resistances today. EVTOLs have gone up very, very strongly this 2023. This has gone up from near $4 to about $16 or about 400% move. You might actually see some sell-offs first on EVTOLs. So we'll see what EHang has in store. But the last time it hit 16, it did fall south. Archer Aviation also at the same camp at about $5. It's now trading at $4.20. Some profit taking happening on the eVTOL region. Joby Aviation as well, some profit taking after hitting $12 recently. So it's now down towards $9.50. We see that the eVTOL has been doing quite significant strength after getting an FAA license this year. But that good news could be seen as a sell on good news type of pattern rather than a buy on good news type of pattern. Palantir is very strong, just as the generative AI applications. So you've got Palantir, a lot of supports actually happening at $12. Although it may not fall at 12, we may see quite a lot of supporters at 14. Let's watch how things play out. But it looks like there's some profit taking first here on Palantir. We've got C3AI, an AI name that people are trading upon as a meme name. This has gone resistance first at 49, dropped fast towards near 33, rallied back towards 40. Nowadays, it's still consolidating. I would assume there will be a lot of buyers at 30. It's trading with a range of buying 30 and then selling at about 40 and 50. So there's quite a huge range for AI. Early industries are innovation. We think that there might be a continuation of shorts. So crypto linked names are still at the resistances. ARCG names, which are cancer related plays, genomics, it could still be early industry. So there could be a continuation of shorts should a market reverse. EV tolls are at resistances. There could be a reversal on the downside. A lot of cannabis are actually hitting bankruptcy levels. Battery plays like QuantumScape hitting new lows. Last mile delivery showing bankruptcy filings. Fuel cells, new lows. Biodegradable plastics, new lows. Solar still showing weakness. AI is an early industry without earnings, but there is quite a huge run up and continues to still be one of the only early industries that are getting a lot of funding despite not all being profitable, not even revenue generating for some. You've got additive manufacturing slowly picking up, but these are potentially too difficult to estimate whether it's a sustainable rally. So a lot of these names could actually continue to be on the short side, as exponential growth usually is when you're too early. There's really gonna be a lot of time before it matures. So this is your quantum scape. You can see that it's actually still on the downside. A lot of trends, lower highs. Every time it rallies, it gets pushed downwards. This is Lucid Group, still on the downside actually. Hot mining. So crypto linked names are near resistances already. So be a little bit careful because they've rallied quite significantly already. There might be some profit taking or pullbacks. Marathon Digital also could get some profit taking first year at about 15 or 16 areas. We've got Enphase. You can see all the solar names are actually dropping. A lot of these early industries continue to drop first. Solar Edge, it's actually showing a lot of distribution, hitting support. That support can break down towards new lows, so just watch out for that. We've got MicroStrategy nearing resistances, crypto linked names as well. So it's near resistance. Be a little bit careful. Pullbacks could be imminent. As I mentioned, some Brazilian, Latin American firms showing some weaknesses. Mercado Libre showing weakness. StoneCo showing breakdowns here. So be a little bit careful. There's a breakdown happening in Brazil and Latin America. New holdings might actually break also the 20-day after seeing the rest of the industries in the fintech payment sell off. This was the news for DoorDash and Uber, so be a little bit careful. Starting July 12, the law requires companies to pay workers 50 cents per minute that they spend on a trip or pay them a minimum of $18 an hour for the time that they spend active on each app. So I think that of course this will be detrimental for the business model of DoorDash and Uber. So there's still actually a lot of engagement with the law industries on how they could compensate New York workers correctly and set a minimum wage that will allow the business apps to flourish and not have to pay this high. So we'll see. But as you can, as was shared, there's quite a lot of companies that are, ah, ganito lang ako magsalita. Pero yes. So there's well, tsaka medyo nagkikick yung baby ko. So, yun. Anyway, yung tawag dito. Yeah, so it looks like the market would have some profit taking first. Be selective. We think that there will be companies that would fail. The earnings season, I don't think anything can be bought. There are, of course, a slew of sectors that will be bought still. Think that AI names will have a buyer, but buying outright in the market is not advisable. You do have to wait for chances if you're going to enter your Adobes, your Googles, your Palantirs of the world. You also have to be very careful if you're bullish on something like example, we're bullish on banks. It depends on how you view it. Are you gonna buy the banks on the short term basis or on the longer term basis? So there's definitely a lot of reasons to be cautious upon. If you're bearish, you can watch bearish plays like Duolingo. Looks like there's bearish plays on Mercado Libre. Looks like there's bearish plays to be done in terms of gig economy play, like apps such as Uber or DoorDash, in case those apps are required to pay a minimum wage of about $18 an hour. Because I don't think the companies can actually pay that high to those workers. That would be very difficult to them to pay. So that said, the market is heavily bought because of the big tech and because of that first half strength. I do think that there will be buyers on dips. That's why you have to be on the watch at about 420 SPY and 430 SPY. Watch those two levels. There's definitely a lot of things to watch this month. So have a good night and take care. Bye bye. That's it. Thank you.